Thank you, Kelly. And yeah, good afternoon, everyone. It's my pleasure to moderate today's webinar on one of the most significant changes Nacha has ever implemented, the rule change coming into effect in March next year, commonly referred to as the Nacha 2026 rule change. Joining me today are Kimberly and Caitlin, who, believe it or not, bring over 30 years of combined ACH experience. Both are APRPs. Additionally, Caitlin holds the AAP and NCP credentials, while Kim holds the AFPP designation. They each have extensive hands-on experience as practitioners in both banks and credit unions. Currently, Caitlin serves as Vice President at Niche Payments Group, and Kim is Vice President of Product here at Affirmative. Did I miss anything? Oh yeah, there's also rumor that Kim knows the Nacha rulebook so well she could probably quote it in her sleep. Kim, should we put that to the test?
Don't put it to the test, but I'll tell you, it sits right here, right with me. So it's my best friend.
Perfect. Let's talk quickly about the Nacha rule change and why this was needed for 2026.
Yeah, so certainly it is like a huge upcoming change just because there is so much fraud going on right now in the network, right? And this right now, it's important to kind of come in and implement this because they've not just set the stage with a lot of the previous rule changes and things that they've implemented, like the R17 expansion, the use of that, or really clarification that you can use that if you suspect fraudulent activity, making it more clear around the R06, so the ODFI's request to return, that you have to respond to those and things like that. The standardizing of the entry descriptions, the ability to, hold exceptions for the availability of funds, all of those things have really set the stage to help allow this fraud monitoring to really take the stage now.
Perfect. Thank you.
And, I was going to add, a second piece in there too is, primarily we've seen that, like as an RDFI, because with this change coming up, like there's focus on the RDFI side. And, primarily with RDFIs, you get your ACH transactions in, they come in, they post, and it's kind of it, unless there's like some exception that, forces you to have to manually look at it. So I'm actually pretty excited to, see that shift, coming down the pipeline too, to where it's not necessarily a liability shift, right? Or at least not right now. But it's setting the tone that like RDFIs do need to be looking at those ACH transactions because they too play a pivotal part in monitoring for this fraud.
Yeah, and really opening up the line of communication between all of the participants, I think, is really important with it as well.
Yeah, and Caitlin, I know like in our conversations, earlier this week, you were even talking about the risk management portal and, changes that are just coming down the pipeline with that too, to help open up those additional lines of communication with just enhancements that they're making around that. Did you want to just touch briefly on that?
Yeah, certainly. So Nacha has been making a lot of changes to the risk management portal where you can send those requests to other institutions through that, and they can respond to you in there as well. It's a great place to kind of keep all of that centralized. And another awesome thing that they have done is added or increased the amount of users that you can have on there. So make sure that everyone that needs to have access to that, it does have access to ensure, consistency and continuity within your organization.
Perfect. Thank you. Yeah, much needed changes, especially as the ACH volume is increasing, as you can see on the slide. And also worth mentioning, like effective September 30th, as you probably all know this year, the US federal government is directed to stop issuing paper checks for all federal disbursements. So even more volume in the ACH network and more potential for payment fraud. So problem is not getting less, but rather the opposite. Now let's go into more detail on an important expression. I think we just mentioned it as well, ACH risk management. Kim, when we talk about ACH risk management, how would you define it and how does this play in various practice of your various institutions?
Yeah, so, risk management is about identifying, monitoring, and measuring the risk. And, you know, the conversations that I have with financial institutions, very large down to very, small community banks, they all have to monitor. They all have their, different ways that they have to monitor. A lot of that is, set by how the board wants them to monitor, them setting up their risk monitoring program. But at the end of the day, you've got to have visibility. You've got to have oversight on what is happening in your ACH origination, your treasury management program. And, you know, typically if you're in that treasury management area, you're trying to grow. You're trying to bring on more originators, third party senders, and it's increasingly complicated. It's increasingly time consuming. And at the end of the day, it's up to the financial institutions to help protect themselves, right, protect their customers, but also protect the network, through from fraud, from risk, and for any of you that have are involved in any of the risk stuff, that there are multiple types of risks. So not you just don't have your fraud risk, you have your credit risk, your compliance risk, your liquidity risks, and there's a list of them out there. But what we typically see is you've got to be able to first of all have the visibility into your payments data and know what's going on, and then you've got to have a way to um, review that data, analyze that data, and then take action on it.
So no visibility, no risk management, or treating everyone exactly the same, which is also not what Nacha asks for. Caitlin, could you share some real-world examples of how these risks show up in day-to-day operations? I imagine this is something that comes up quite often in your conversation with members, especially during audits.
Oh, yes, certainly. So there's lots of different things that happen, especially when people get down to it and trying to figure out how to apply the rules. Because some of them, most of the rules even are really kind of risk-based in general themselves, depending on the level of risk that your activity handles is dependent on how you should treat the compliance or the rule related around to it. So, for example, periodic reviews of your originators, establishing those exposure limits, all of those things play into the risk level of those kinds of activities. There's lots of different things around even the unauthorized activity, making sure that those are getting processed in a timely manner, and all of those things, and that you're monitoring those, and that you understand that your originator understands what those mean and are following up on those types of things. All of those are huge important kind of pieces to your ACH risk management.
Hmm. Thank you. Yeah, and thanks also, Kim, for those insights. Let's now turn to the new rules. And to summarize, Nacha has introduced those rules for safeguarding the network from fraudulent and high-risk activity. The goal is to enable end-to-end risk detection across the entire ACH payment lifecycle. And importantly, it's no longer, as Kim mentioned, just the ODFI's responsibility. It's now a shared effort, shared responsibility across all network participants. Let's go into the details, Kim. As our resident scholar of the Nacha rulebook gospel, could you walk us through what exactly is changing?
Right. So up here on the screen, we've got, a condensed version of what's happening with the Nacha 2026 rule change. But, it's enforcing fraud monitoring for ODFIs, for originators, third party service providers, third party senders. And, prior, and Caitlin, double check me on this, but I believe that, prior with the rules, it was just based off of web transactions that had micro entries, that kind of had to be monitored too. So now, like with this change, this is not just based off the web transactions. This is based off of all of the SEC codes that you need to be monitoring too.
Yep, that's certainly true. It was more kind of based off either those web debits and web credits and micro entries, which don't always have to be a web entry, but you were still required to keep a monitoring system in place for fraud.
Right. So, not only are, the ODFIs, they're having their fraud monitoring expanded, but, the RDFIs are being geared towards, doing monitoring also, which we just talked a little bit about that. But, you know, with the change that's coming up, with a lot of the fraud pieces that the FIs actually already have in place. You already have something out there for like fraud for the outgoing items. But again, for that incoming item, what are you going to do? What are you going to look at? How are you going to look at those? And are you getting an in-house solution? Are you outsourcing, looking for something? And then the new company entry descriptions. So, making sure that your payroll and your purchases are in those company entry descriptions. So that right there is just, again, setting that standard so we can know, we can monitor the ODFIs, the RDFIs can know that, all right, these entry descriptions, yes, these are payrolls. So that kind of goes back to that fraud monitoring piece where if you have an originator that isn't putting in payroll, for their payrolls in that entry description, then is that a true payroll? Right? Is there something kind of funky going on out there? So, amongst the monitoring that needs to be done, you need to be looking at those entry descriptions and making sure that if you have an originator, that they are using, the proper entry descriptions. Because if they're not, that could potentially indicate, one, they're not following the rules, but also, there could be somebody out there going rogue, sending in some other sort of transactions that aren't truly payroll.
Yeah, and certainly Nacha's even indicated that it's not something you necessarily have to police as an ODFI, but I strongly encourage you to, when you're going through your originator reviews or any kind of monitoring, if you set those up and they typically use certain, entry descriptions and they start, changing, that you're providing them with education of what they should be using and helping them implement that. Some of them may just not understand exactly when they need to use a certain entry description code. And I really look to hopefully see more standardized entry descriptions because I think it would really help along the lines of everyone with fraud monitoring. I've even worked with a client just a couple months ago who I was doing an audit for, and I was looking at their web credit entries, making sure that they were included the individual ID on their statements that they were providing to their customers. And it was missing. And when I looked into it further, they indicated that they didn't believe the entry was a P2P because it didn't have it in the entry description line. And so then I just had to have the conversation, look, all credits, web credits are, consumer to consumer transactions or person to person. So they really need to have that on there. So you just need to change how you're monitoring for those web credit entries, right? Making sure you understand what the entries truly mean in those kinds of situations.
And, I would think too that, as these entry descriptions are, coming standard or standardized, that's also going to help you, if you're actively looking at your data and you're actively understanding what you're processing, from a risk-based perspective, it's going to help you better determine, what type of transactions are actually going out the door. Because, if you know that like primarily your portfolio is payroll, what type of risk are you assigning to that? Is that considered a higher risk? Are you doing pre-funding? Is there, I guess what I'm trying to say is it can actually come into play to help you like identify like or contribute. That would be the word I'm looking for. Contribute to, almost like that risk score that you're developing out there that you've got, because again, it's just going to help you know what your originators are actually originating.
Yeah, and the biggest piece is that you're communicating between departments, right? A lot of you have fraud departments that are different from your BSA departments, that are different from your operations departments. Like making sure that there is that line of communication and that all of your, everything that all of those different departments that are doing that may be monitoring for that activity is working together.
Hmm.
Excuse me, I had a frog in my throat.
You're okay,
Um,
Kate. Hey, Caitlin, I think I want to interject because we have a couple questions coming through,
Okay.
and I actually think it's tying into everything you guys are talking right now is, how do you implement what this actually means for your risk management program? Two questions that I think tie hand in hand is once they suspect fraud, what do they do? And what does updating policies look like? I think that kind of goes hand in hand and it's probably individual to the FI itself on how they handle updating policies and what they do when they suspect fraud. But is there anything that you guys recommend or a starting point as people start assessing those two questions?
Yeah, so certainly with the first one there, once you suspect fraud, you should stop the transaction from going any further. So in that, if you're on the ODFI side, that means, stopping that from going out if you've scanned it beforehand. If not, maybe you need to take action to contact the RDFI that, you may need to be looking into this further, things like that, or even just contacting the originator before contacting that RDFI, if needed. That entry may be fraudulent to see if you can recover those funds with the ROS6 ODFI request for return. Then if you're on the RDFI side, certainly again, you want to making sure that you're following up on that. If you are monitoring those before they are hitting the accounts, again, you certainly don't have to. You can prevent those funds from, posting into there, or you can delay the funds availability. As Nacha has, kind of added clarification around that rule to allow for those exceptions if you've identified a flag. And when you've done that, you need to make sure that you're contacting with the ODFI that, hey, we're delaying these because we think there may be an issue. So certainly, even with that, you still have to follow Reg CC. So what does that mean? Well, Reg CC is next day funds availability. So making sure that you have resolved that issue within 24 hours, where in the Nacha rules, you have more of a stricter time frame typically to make sure those funds are available throughout the day to the account holders.
And I wanted to add in one thing because you did mention, Caitlin, that this can be done, the rule change can be applied for after the fact. So after the transactions have went out. And I'm gonna say this from like what I experience a lot of times dealing with financial institutions is being able to get the real-time monitoring can be difficult because depending on if your core is in-house or outsourced, it as those transactions are flowing through and getting ready to go out the door to the Fed, to the EPN network for processing from the core, it can be very hard to interject a solution, in there to do all of this monitoring, to be able to get some of these transactions stopped. Because a lot of times, especially when you're dealing with the fraud stuff, there is multiple departments involved, right? You've got your treasury management. It could be your ACH operations. It could be your loss prevention, your fraud department. So there can be a lot of hands in the cookie jar too, wanting to look at this stuff and identify and analyze. So I do think it's a great thing that, Nacha did come out with this and say, it can be done after the fact because you still can mitigate risk even after the fact. And it's still going to allow you to be proactive because, what we see, or I know what I see a lot of times, is we live in such a reactive world when it comes to fraud. And, in our departments, we get blindsided sometimes. You have some sort of fraudulent event, you have this anomaly happen, and sometimes you don't find out until days later or even a month later, just depending on what the situation is. And then you're caught off guard and you're like, oh my gosh, and you're having to answer to the powers that be. So, a proactive risk management approach is, what we want to gear for with this rule change, and being able to, get to this stuff as quickly as possible. If it's not real time, fine. If it's after the fact, great, but be on top of it, right? So
Yeah.
if you're still doing it after the fact, make sure you've got your policies and procedures, which I think you're going to get into in a second, updated. So, it's there. So, like, all right, what do we have to do, even though it's all after the fact? And it's still, you still have time, because you can reach out to those RDFIs. You can reach out to, if you're an RDFI, you can reach out to the ODFI if you need to.
Yep. And we have a couple questions I see come in around the delay of the funds availability.
Mhm.
So the first one is that do we have to be registered with Nacha as a 314B participant in order to delay funds availability? No, you just, as long as you are a either an RDFI, or you can even be a banking as a service, a third-party service provider acting in as a with responsibilities as an RDFI, you can certainly use that. And then the next question is, so from the RDFI side, we will not be liable past the 24 hours if we contacted the ODFI and didn't get a response in the time frame. So that's not necessarily the case. The rules say that you still have to follow Reg CC. The rules state that you have to contact the ODFI to let them know that you may not be meeting Nacha's requirements for funds availability, but you still have to meet the Reg CC funds availability. Now, if you need to implement case by case issues, you'll have to handle those within the Reg CC parameters.
Thank you so much, and I can clearly see why you all have these titles. I know we promised in the invitation that we will translate the Nacha rules into easy language for everyone. So let's do a little exercise, Kim and Caitlin. How would you explain my 5-year-old, or maybe here the audience's CFO, CEO, CRO, whoever, like, how would you explain the rule changes in very simple words, like in one sentence for an ODFI? What are the biggest changes they need to take care of?
And really documenting what you're doing to monitor that fraud. Notch just came out and, has said, we're pretty sure just about everyone is doing something, but things are not being documented what those really are, and they're not being cross-communicated in between the departments. So making sure that you have a fraud monitoring process in place. And a lot of that is going to be making sure that your staff understands what the entry, the formatting of the entry means, what the SEC code means, what the entry descriptions kind of communicate, what those types of, different payments can indicate. So making sure that they understand those, and making sure that, that is being utilized to help monitor for those. They don't specify that you have to do something specific. So you can take and look and see what you need to do and from what you have, and making sure that that's working. But, just making sure you have something in place is the biggest part with it.
Makes sense. Thank you. And
I
Kim, what
wanted
would
to,
you say? Oh,
I wanted to add one
please
thing,
go.
Marcus. So it's kind of scary out there, right? That, with this, it doesn't say specifically what you have to do. This is open to interpretation. You've just got to have some sort of risk-based fraud monitoring process in place. So, as you all are out there trying to figure out like what you're going to do with this, look to the subject matter experts, look to your your payment associations, because they have a lot of really great, really great ideas. They're well versed in like what the change is. They can help you interpret if you're still confused, or just need some clarification, because it's open to interpretation. So we'll give our interpretation of it later on in the call today, on what we're going to do, and how we're helping the industry with it. But yeah, it's definitely, it's always been a thing ever since I've been, in ACH. Is It's always just kind of scary when you're just having to try to figure it out on your own and trying to interpret on your own. So, you all have lots of resources out there. Use them, right?
Hmm.
Don't try to make a siloed decision and decide, oh, we think this is checking the box, right? Reach out to your payment associations, reach out to those subject matter experts.
Yeah, that's really important because it is never one size fits all in any situation. And that's why I always encourage, even for institutions that like to do their audits in-house, to often or at least periodically have those assessments, either risk assessments, audits done by an external expert, making sure it's somebody that, is an expert and not just kind of following a prompt. Because we are able to kind of help guide in certain situations and what you could and couldn't do, utilizing what you have and meeting you where you are with your infrastructure. Because not everybody can implement a huge, software program or do different things. So a lot of us are really familiar with the different cores and their capabilities. Reach out to us. We're happy to kind of help discuss and talk through those. I've even been working with some originators who utilize multiple financial institutions as their ODFI, and did help them with an assessment of their fraud monitoring capabilities and what they needed to do and what they could be doing more. So all of those things are really tailored to specifically of what you or they individually are doing. So reach out and ask. We're always happy to help.
Thank you for these points. And is it fair to summarize for the RDFIs that for the first time ever, they need to do something?
Yeah, and I'm sure, a lot of times they're already have been doing something, but it's now a requirement. So making sure that they have those documented. They don't have to be doing, anything specific, but figure out what you can do with, what you have available to you, the resources that you have. If you do need to implement a new system, that you understand what you really need to do to meet your needs of your institution.
Perfect. Thank you. And I see we also have some third-party senders and processors joining us today. Anything you would recommend to them, like what changes for them specifically?
Yeah, so they're going to also have to implement some type of fraud monitoring systems as well. And again, it's really going to fall back to monitoring, all of the stuff that the ODFI already really does with the, especially for the third-party senders and service providers. That can mean monitoring for, return rates and different types of SEC codes and volume and velocity, all of those types of things. Making sure that, there's proper authentication practices in place. All of those will tie in with that monitoring piece. As originators, it's going to be really important that they understand to monitor what their return rate ratios can mean to them. It's really important that they understand how to structure and format their entries and, that what their SEC codes mean. So the huge thing we've been working with this originator is explaining to them what each SEC code means and how they may limit their liabilities in certain situations with different SEC codes, why they would want to use one over the other, just because they weren't aware. And in one situation, they're not able to tell what SEC code is being used through their, system that they're set up with. It's one of the big banks. I won't name them. But it is really kind of convoluted for them to try and understand what their payment even is structured like. So how are they supposed to monitor when they can't even see what those entries are structured as?
Wow. And you were saying like this was a big bank, but the rules apply now to everyone, right? Like
That
there's
is
a
correct.
grace period for the smaller ones, but the same rules for smallest credit union up to the biggest bank.
Yep, certainly.
Wow. Anything you want to add, Kim, on this slide before we move on to pain points?
No, I'm good.
Okay. Caitlin, I know you've worked with banks and credit unions of all sizes, as you mentioned, on ACH audits. Could you share an example of an institution where you feel like they faced heavy fines or had findings? Like what led to that? What did they miss?
Yeah, I think the biggest one that comes to mind is we were working with someone and we were analyzing that they were placing holds on credit entries utilized to open to fund online accounts. So to open online accounts. And they were placing those holds pretty extensively for like 30 days, just so try to help kind of mitigate the risk that they're going to come back unauthorized, right? Well, that's definitely against Reg CC, most certainly, right? So we discussed with them different ways different methods that they could use to still mitigate that risk while being compliant. So, talking about instant payments and the use of those, or, looking at the type of account that it is, and if they have the ability to restrict the type of activity that is going out of the account and how to kind of set that up and things like that. So there are options in those areas where you feel like you're trying to mitigate risks. And there's no good way to do so. There's almost always a good way to do so, or at least, a better way than just blatantly, breaking a law or a regulation. So definitely reach out again to your payment experts to see how you can be handling those situations.
I feel like in that example, it's probably you see a lot of mule accounts. Like
Mm-hmm.
the new accounts are opened, they're funded with the fraudulent funds. The money mule then takes the money and moves it out, whether it's taking it out in cash or through cross channel risk.
Yep. And then what happens is that the entry that they used to fund the account was actually unauthorized in some way, and
Yep,
somebody comes back 60 days later and says, "Oh, that's unauthorized," and
gone.
that's it.
It's
So,
gone.
we discussed with them also different ways to monitor for the activity in that account to help, raise those flags. What would be that activity that kind of make you kind of go, what's going on here? Like if there's big sums of money being transferred in and then, also being trickled out, the exact same way, being, more credit transfers out, account to account or person to person, but it's not maybe to the same account. So recognizing those patterns. And again, very important to be talking across departments. You're going to have to break down those silos and you're all going to have to work together because this it may be things that your BSA team or your fraud prevention team are already looking at, but it's important for the operations people to understand that as well. When I used to work at a community financial institution and I worked in the deposit operations and things, and towards the end, when I was leaving, they were wanting to break out all of the jobs that the operations staff was doing. And I cautioned them on it because they wanted to give them to people at different branches because you can do the work anywhere, right, on the computer. But I cautioned them on it because I said, we catch a lot of stuff because we're talking to each other during the day. Like we're sitting next to each other. Sometimes we're just talking to ourselves and we just overhear, hey, I saw that person on my report too. So being able to have things that help you place everything together and breaking down those silos and having some type of line of communication between your departments and your staff is important.
Okay. I have one big question for you both. We have 91 people joining today, plus there are like 9,000 banks and credit unions in the US. Do they all now need to buy a software solution like ours to comply?
No, not necessarily. Like I said before, you could already be doing something. You just don't have it documented. You just haven't, really included it within your ACH policy. I know that we've started doing a BSA audits and risk assessments just because everything is starting to collide so much together. And a lot of times when we're reviewing these BSA policies and different things, it doesn't really mention ACH at all. It doesn't really really particularly specify the differences between the payment channels and things like that, unless there's a really specific thing they need to address. So they just address it as a whole. So it's going to be important that, ACH is identified across those policies and where they're appropriate. That it's a huge thing and it all has to come and play together.
Okay. I was secretly hoping for a simple yes here, but yeah, seriously, if you all decide not to throw more people at this problem and instead choose a professional software solution that works 24/7 and costs less than hiring additional staff and delivers like far more value, let me share one slide how we help fight fraud at Affirmative. We monitor both incoming and outgoing transactions for fraud. So for outgoing, we score each transaction to determine the likelihood that it will be returned as unauthorized, as Kim mentioned. Unauthorized transactions are by far, as we all know, the most common form of ACH fraud. We have developed a score using machine learning based on patterns detected across more than 1 billion transactions per year and associated returns on our platform. We believe we have the industry's most powerful database of ACH transactions and unauthorized return activity, and the results are highly accurate. It's a list of suspicious transactions that the ODFIs can investigate, verify, or otherwise manage with holds or reserves to protect against fraud. On the RDFI side, for incoming transactions, we take a little different approach. We identify suspicious patterns which have been reported to be indicative of fraud by our clients. We have incorporated a number of patterns into our system already and are always adding more. Some examples: an unusually large number of treasury deposits or a historically dormant originator that have suddenly become active, or micro deposit activity that should suggest a fraudster is probing for active account numbers. And similar to outgoing transactions, the output is a list of high-risk transactions the RDFI can focus and prioritize its investigation. So in summary, software like ours doesn't just help you comply with Nacha 2026, it helps you fight fraud from both the ODFI and RDFI side, and ultimately supports better risk management, more efficient operations, and increased revenue.
So I think what I'm hearing from you is I've been preaching, communication and ability to talk across departments to be able to identify this. And I believe what you're saying is that your product could probably help ease that pain a lot, especially when we're in a lot of a remote environment and people aren't just right next to each other and being able to listen to each other's, self comments.
Yeah, it definitely gives you like this foundation of data, and then a proper communication can happen. Without this proper data, and let's all agree, Excel is great, but it's not a real database. And especially if you now need to apply some machine learning, some pattern detection, it reaches its limits. Its limit. I know, Kim, we'll be diving deeper into the reports we provide to our customers on August 12th during part 2 of this webinar series, but could you give our audience a quick sneak peek of what's coming?
Yeah. So this piece was incredibly fun to get to be involved in, with development of these new reports and fraud detection items. And I don't know if everybody would say it's fun, but I find this stuff incredibly intriguing. I find it fun to be able to get to talk to the industry, host roundtables, get feedback from, other subject matter experts, other financial institutions, other third-party senders and processors of, what they're looking for. Because when we roll out, new reporting packages or, new product, we're not just saying, oh, Kim says this is what it should be. No, it's a collaborative effort. So, through and payment associations, like I cannot forget the payment associations, because we involve the payment associations when we're collaborating on this stuff, because they see firsthand what's happening in the FIs and they see what the gaps are. So, once we collaborate with them too, we can, work on helping fill those gaps. But so kind of just a sneak peek on some of the items that we are going to roll out for the 2026 rule change is so incoming pattern detections. So for dormant originators, irregular tax deposits, and low volume transactions. So we know that in the industry, that unauthorized ACH is it's a huge source of fraud. And, when we were having these conversations, when we were, going through use cases with financial institutions, these are some of the items that came up that they want to have that monitoring on for the ODFI side. So being able to have this pattern analysis, this pattern detection to identify dormant originators, those irregular tax deposits, which are deposits that could be coming into an account that is only maybe supposed to be receiving one tax deposit, but instead they got 5, they got 10, they got 50. So, if you've got that many tax deposits coming into an account, something's kind of off with that, and you're going to need to investigate to see what's going on. So it's not saying that it's fraud per se, but it's saying this is irregular. You need to look at this and you need to do some investigation, because those tax deposits may be going to an account that they're not supposed to go to. So even like with the low value transactions, those are penny, 2 cent, 3 cent, 5 cent transactions, but they're not labeled micro entries. So we typically see in the fraud world, right, when those low value transactions start hitting accounts, those fraudsters are testing those accounts to see if they're active, to see if they can kind of get away with some funny business. So it's good to have an early sneak peek into those transactions versus those transactions going unnoticed, and then that fraudster hits that account really hard and pulls all the money or pushes it out somewhere. For our outgoing items for the ODFIs, we have developed, and Marcus spoke about it, this really cool transaction risk scoring system. So you will be able to have your transactions risk scored to see what the likelihood of those transactions returning as fraud are. So, as you're building out your risk portfolios, as you're doing these originator reviews, as you're monitoring to all these different types of risk, you need to be able to know, like, okay, what's the likelihood of these outgoing transactions getting returned? And you obviously can't do that on a transaction by transaction basis manually. So to be able to, know that 80% of your portfolio is low risk on these transactions, and you only need to focus on a very certain percentage of a very certain transaction set within these, with what you have outgoing, that's really going to help you become more efficient in your risk management and be able to catch these transactions and be able to have that proactive risk management versus this stuff going out and then you finding out a week, 2 weeks, 3 weeks later, when it finally creeps up and somebody looked at their statement or reported it.
And Kim, I see we just got a question, which I guess also ties into what we wanted to talk about next. Resources and how all of this could actually work in practice. I know we hear a lot from our prospects, like, over and over again from everyone that IT resources are hard to get and that they are all exhausted after they finally got through with like the FedWire ISO 2022 implementation. So is this here now going to be another like 9 to 12 months project for them, or how can customers get implemented?
Yeah, so I run implementations also. Um, with our form of implementations, we can, source your data, organize your data, and get it up and running in a production environment. And I'm averaging right now on like a 30-day time frame. So it's really, really quick. And I came from the bank, the banking side of the house. I understand how resources are limited, IT resources, department resources. So, one of the things that we really strive for over here is a quick and an efficient implementation and quality data. So that's a big piece, is sourcing quality data, because if you're going to be looking at your risk management program the way that you need to be monitoring to it, you need to make sure you've got quality data in there too. You've got bad data, you've got, wonky trace numbers, that's not doing you the most amount of justice. So, our goal is, when we're working through implementation, is we source that quality data. I take the heavy lift, my support team takes the heavy lift, and we handle all the setup, all the data organization. And within that 30 days, we are able to have a production environment for you with access to your data and full reporting.
And it sounds like not too much lift on customers' IT, right?
Correct. That is what we want to avoid if we can. Is, again, we recognize over here at Affirmative that it can become resource intensive. So what we do, and the way we've structured our implementations, is a very low lift on the FI side and on the FI's IT side.
Perfect. Thank you for clarifying. And I hope you're all still with us. And maybe some of what is getting discussed here is a bit overwhelming, especially some people might wonder where to even start. 20th of March is just like 253 days away. So here are 3 things we recommend to do right now. First, I think Kim mentioned, talk to your peers. Like, this change now affects everyone, not just ODFIs with high origination volumes, but every financial institution. Caitlin, you mentioned like your group and like other payment associations, they can help a lot with their perspective, with their expertise. So definitely talk to your payment association. And then a third one, let's talk. You've got my contact details, and my team would be happy to hop on a quick call to see if our solution is the right fit for your needs. No hard sell, I promise. It's just a 30-minute discovery call that might significantly improve your sleep, I guess. Now let's move over to questions, and I see we have 3 questions here in the chat already. Let's start with the second one, Caitlin. By March 20th, does every entry description need to be changed?
I wouldn't say every entry description, but those payroll and purchase entry descriptions, and the purchase is for web debit entries that are used for e-commerce purchases. So making sure that all of those are in line. Again, Nacha has said that they're not expecting the ODFIs to police this, but I strongly encourage you to make sure that you're providing that education to your originators when you're going through your periodic reviews, or you're setting up your monitoring, that you're kind of looking for these things. And if you see that they're not doing it, hey, maybe kind of have another conversation with them. It's not something that you should, threaten to turn off their ability to send the ACHs if they're not doing it. But, make sure you're having those conversations so that they understand the importance of standardizing those entry descriptions.
Perfect. Thank you for clarifying. And Kim, I see there is one follow-up question to your last slide. Someone, and I know it sounds too good to be true, FIs will not have to send their ACH files to Affirmative. We handle all of this, correct?
I'm sorry, what was that? I didn't catch it.
Like, there is no need for FIs to send the ACH files over to us, but we source this. No need for them to send
Correct.
this over to us.
Correct. So we've actually got the ability to source them directly from the Federal Reserve. So that kind of cuts out all of the legwork on the FI side, and I can just go straight to the Federal Reserve and get it from there.
That's amazing. I see there is one more question, and I see the question was asked quite in the beginning, so I guess people might have heard what needs to be done by March. Is there anything we need to prepare for other than ensuring we are actively performing fraud monitoring, but for Nacha audits to ensure compliance with these rules? Maybe one question to Caitlin. What would you say is like the key that FIs need to do in order to be compliant?
Make sure you have a documented process. Make sure that it's documented, that your procedures, your policies, all of those things are updated in all of the appropriate areas, not just your ACH policy. If you have your BSA policy, if you have a fraud policy, all of those things need to be considered.
Perfect. Thank you for clarifying. And I saw one more question. What about RDC? I know we spoke a lot about ACH today, RDC, wire, real-time payments. Kim, can these also be handled by Affirmative, or is this something a customer would need a different system for?
So the Nacha 2026 rule change is just gearing towards ACH, but when we're speaking, for risk management as a whole, you may have originators that are doing wires, that are doing RDC. And when you're looking at managing that risk, you don't just want to look at ACH. You want to look at all of their payment rails and holistically. So when you get in there to start doing those originator reviews, you're looking at giving them credit and debit limits. You need to know what's going on outside of just their ACH portfolio. You need to be able to know what's happening on the wire side, the RDC side, because they could potentially be a low risk originator over on the RDC or the ACH side, but they could have higher risk, over on the wire side, for instance. So, when we're speaking risk management, you want to be able to see and look at these your originators holistically. So knowing what they're doing across the board, if they've got loans, if they've got if they're doing the wires, if they're doing the RDC, because that is going to help you determine like what potential credit limits you're giving them, what debit limits you're giving them, if you need to make them pre-fund or not. So holistic overview for overall risk management, I'm a huge advocate for, because that's going to make sure that you are not only protecting yourself, your financial institution, your originator, but the network also.
Perfect. Thank you. So long answer summarized. Nacha 2026 applies to ACH only, but Affirmative can help with like all these payment rails that were asked about. Perfect.
Yeah.
Thanks everyone for joining us today. I think we answered all questions. Before we wrap up, I want to hand it over to Kelly one more time, who pulled all of this together today for us behind the scenes. Thank you so much, Kelly. What else do you have for our audience?
I appreciate it. If for everyone that's still with us, just wanted to take a quick moment and send and showcase a few reminders that we have for upcoming dates and partnerships. There's a lot going on, and we're more than happy and encourage all of you to join. So we do have part 2 of this series on August 12th. That's going to be a Tuesday at 1 p.m. Eastern time. And that's where we're really going to be diving into our solution a little bit deeper. So this is a perfect time to start assessing your risk management program and how that plays into the Nacha 2026 rule change, and then really taking a deeper look at our solution in August to see if that's a viable and good option to implement for Nacha 2026. We also have some additional webinars and events coming up. We're actually going to be a part of Nacha's Member Month in October, so be on the lookout for more news there. And then we do have some in-person events as well. So we have some things that we're doing with WestPay and some of their virtual things they have going on, as well as Kim and our CIO, Scott Brown, will be speaking at the Clearinghouse Conference. And then we'll also be at the TPPA conference out in Phoenix. So we'll be sending out more information in regards to this and all of our upcoming events. We'll send reminders, and we'll also be sending a recording of this, the slide deck, and then we'll also be working with Nacha to create a guide that we'll send out a little bit later. So expect a follow-up from me probably a couple times, but I'll try to keep it concise and to the point. So thank you again so much. I think we maybe had a raised hand. If you have any other outstanding questions, though, please feel free to reach out to us. I'll be sending out those resources. You can always reply directly to me. All of Marcus's information is here as well, and I know he'd be happy to talk to you guys. Awesome.
Thank you, everyone. And
Thank
talk
you so
soon.
much.
Thank you.
Have a
Bye-bye.
great day.